What's up, guys? It's Rob here, and countless stocks are setting new lows today as we enter what many are calling the next Great Depression. This is leading to stock market investors getting decimated, as well as investors holding other assets like real estate, which is starting to experience declines similar to those seen during the Great Recession, and crypto, which is reaching multi-year lows as investors flee riskier assets. And all of this is seemingly only going to get worse as geopolitical tensions rise between NATO and Russia due to what many believe was an attack against a major oil pipeline, as well as the possibility that a new conflict could start between China and Taiwan, possibly dragging the United States into the mix as well, which would only further complicate already very stressed supply lines and worsen skyrocketing inflation. But before we get into any of that, I just wanted to ask if you could please subscribe to the channel if you haven't already, either on YouTube or Rumble. Whether you're watching here or there, it would be very much appreciated and really helps out. But even without worsening geopolitical tensions, there are many fears based on what's currently going on in the US economy. We already know that inflation is running out of control, and to make matters worse, Biden just signed a $740 billion Inflation Reduction Act, which researchers from the University of Pennsylvania say will actually increase inflation until 2024 and then decrease it in the following years. So in the short term, it seems like it will only make matters worse. This, in addition to all the stimulus that's been done over the past 3 years, is leading analysts to believe that we'll be dealing with inflation for a very long time to come. And that could lead the Federal Reserve deciding to go down a path of continuous interest rate hikes, thus pushing the prices of stocks and other assets lower and lower. Because interest rates have the effect of really hurting the overall economy and financial markets, because as money becomes more expensive to borrow, it's tougher for businesses with debt to operate as their margins shrink. And it makes it tougher for stocks to outperform other investment vehicles like high-yield savings accounts or CDs. But it's not all bad news. There are some indications that now may actually be a good time to buy stocks and hold them over the long term. While there are significant risks over the next several months, and this is creating a significant amount of fear, that actually means that stocks are trading at potentially lower prices than they should be relative to their earnings and growth potential. For instance, the S&P 500 is trading at an average PE ratio of about 18, making this the lowest average yearly PE ratio we've seen since 2014. That's not to say that things couldn't get worse, since stocks on average lose about 36% of their value in a bear market, and up until this point, we've only lost about 25%, so there could certainly very well be another 10 to 11% drop or more towards the end of the year. However, time is on our side, and since the average bear market lasts on average about 289 days, and we've been in this bear market for 269 days, meaning that on average we should have about 20 days left to go. But obviously that doesn't have to be the case, since every bear market is different, and with all the potential negative catalysts out there, we could be in this one for much longer. At the end of the day, it all depends on how much faith people have in the markets, and if that faith is bolstered, people will start buying again. But if people get discouraged, then they're going to sell. Overall, though, I'm just going to keep doing what I've been doing for a long time and buy stocks that I see great long-term potential in, understanding that there is significant downside risk over the short term, but nearly unlimited upside potential over the long term if I choose the right companies. So if you guys want to hear more about some of the stocks that I'm interested in, feel free to subscribe to the channel, turn on post notifications, and keep an eye out for the next video. But other than that, guys, keep in mind, none of this is financial advice. It's just my opinion, and I hope you have a great rest of your day. I'll see you in the next one.